Welcome to another market and portfolio update. What happened over the past 7 days in the crypto market? At the start of the week, Ethereum went above 3,000. My portfolio went above 100,000, which is a major milestone for me. However, later on the week, Bitcoin ETF started underperforming, which caused the whole market to crash. My portfolio retraced with £14,000. Kraken is being sued by the SEC. Uniswap is finally doing something with its governance token. The AI craze continues, and I have a new token in my portfolio. We're going to cover all this and much more. But before we get to any of that, guys, please, for me, like this video, subscribe to this channel, and click that noti bell. Now let's get into my portfolio. So I started the week at 95k, then I hit a massive milestone and it went above 100k. It continued to rally up all the way up above 105k. It's not showing it on here, but it went above 105k. It had a light retracement back to 98k, which I thought was quite healthy. Then it started rallying again, and on Tuesday is when we realized that ETFs are not performing as well as last week. So then it just started dumping down all the way down to about 90k. Since then it's recovered and it's now sitting at 96.4k. But at one point, guys, I was down 14k, even more than 14k. That's just crypto for you. You have to be ready to see massive gains and massive drawdowns. Okay, let's look at how the Bitcoin ETFs were performing. You can see that over the past week we received 0.65 billion of inflows, which is not much when compared to the previous week when we received over 2 billions. Monday was a non-trading day for the USA, so nothing happened. On Tuesday, we received 355 million. Wednesday, 94 million. Thursday, 33 million. And Friday, 170 million. Still net positive, however, nothing compared to what the previous week brought in. Okay, now let's look at some of my coins and how they performed. Casper performed really well with 8.12% up. Mintlayer was underperforming because Bitcoin was underperforming. Super didn't do really well either. Coty. Now this is the new coin and I'll explain why I bought this in a minute. Alturo performed really well. The graph went up 31% on the AI craze that was happening, which I'll talk about in a minute. Actis, however, didn't do so well, and it's actually getting close to a place where I would probably look to come out of this token. So what I'm going to do is I'm going to set an alert on my phone, and if Actis goes below 0.1, I'll just sell it. The rest of the projects had mediocre gains or losses, with Solana being a noticeable one, minus 7.4%, ApeCoin plus 8%, and Wilder World plus 7.5%. However, I'm no longer invested into Wilder World. Now guys, what is so special about Coty and why did I buy it? Okay, you can see that its market cap right now is 307 million and its fully diluted market cap is 401 million. So we can see that there will be some inflation in the future, but not much. I bought Coty at 0.17, nearly 0.18. Since then it went all the way up to 0.25 and had a little retracement to 0.20. But why? Why did I buy Coty? Well, actually I was listening to Ran from Crypto Banter talk about Coty and how it's so undervalued. So I'm going to play you a clip from that video so you can see it for yourself.
Looking at their fully diluted valuations. So Optimism has a $15 billion fully diluted valuation. Arbitrum has $20 billion fully diluted valuation. Mantle, $5 billion. Metis, $1 billion. Matic, $10 billion. Coty, $275 million. It didn't make sense to me. Starknet, $21 billion. Recently, Coty made an announcement that they're becoming an ETH layer 2. And that wasn't the only part of the announcement. The announcement also said that they've got this privacy-centric ETH layer 2 and that they've created a new kind of technology. And at the time, I didn't really click as to how amazing this new type of technology was. They said it's at Coty V2, at a core, we use advanced privacy-preserving solutions known as garbled circuits. And our breakthrough results are 1,000 times faster than the computation of fully homomorphic encryption, 100 times lower latency compared to current solutions, 250 times the smaller storage requirements than FHE, fully homomorphic encryptions.
Okay guys, so you can see that compared to other L2s, Coty is undervalued and is bringing a brand new technology to the ecosystem that is much faster and requires much less block space than FHE, fully homomorphic encryption. So what does fully homomorphic encryption mean? To explain it to you without being too technical, it basically means that the mechanism can read encrypted data without decrypting it. This is how Coty is being able to be faster and require much less block space. When you put all of these things together, I think that Coty can easily reach 6 billion market cap, which is a 20x from here. Now, this is not investment advice and I'm not telling you to go and buy Coty, but this is exactly what I'm doing and the reasons as to why. So what did I do to buy COTI? Well, I sold some GRT tokens and some Superverse tokens. The reason why I sold some GRT is because the token had pumped on the recent AI hype, and it was just time to take profits. And very similarly, Superverse had pumped due to a recent hype that was built up from Alex Becker and Elliot trades. That's why I decided to take some profits and put it into COTI. If you guys want to see these trades as they happen, then make sure to follow me on Twitter at Alex Yanakov, because this is where I post my trades as they happen. You can see that I sold 2k of GRT and bought 2k of COTI, and then I bought another 1k of COTI and sold 1k Super, just rebalancing, nothing more. Okay, that's my portfolio update done. Now let's move on to some news. First, we've got an article from Decrypt. No guarantee Bitcoin halving will be favorable for miners, says Riot Platforms. Riot Platforms is one of the largest Bitcoin mining facilities. So what does this mean? Let's dive in. The revenue we earn from our Bitcoin mining operations would see a decrease, which could have a material adverse effect on our results of operations and financial condition. Okay, that doesn't sound very good. Miners with efficient operations, i.e. low energy costs and the latest generation of ASICs, ASICs being the Bitcoin mining machine, will continue to operate, while previous generations of ASICs will most likely be unprofitable and be shut down for economic reasons. How to prepare? Get ready to shut down unprofitable machines. Right, so miners may be shutting down profitable machines. What does this mean for the crypto market? Well, you see, if miners shut down machines, it means that the hash rates or the supply of Bitcoin will reduce even further. So it won't only reduce from the halving, it will also reduce because less miners are working on the blockchain. If you have the same demand and a decrease in supply, it means that Bitcoin price is projected to go even higher. However, this is something that happens pretty much every halving. Unprofitable Bitcoin mining machines are shut down either until Bitcoin rises to a price that is profitable for the miners to be turned back on, or the miners are scrapped and new ASICs miners are bought and switched on. Either way, it's nothing bad for Bitcoin, and in fact, we'll probably see some good price action in the short term. Okay, what's next? The European Central Bank is either lying about Bitcoin or lying to itself. On Thursday, the European Central Bank published a blog repeating debunked claims about Bitcoin, the world's first largest cryptocurrency, according to ECB Director General Ulrich Binchsel, I'm sorry if I pronounce their names wrong, and advisor Jürgen Schaaf, has failed as a currency and investment, and therefore it has a fair value of $0. Now, I'm not going to comment on whether or not Bitcoin is priced at €0, but I'm going to show you how much €1 is in Bitcoin. And it's 0.000021. Okay, that's €1 in Bitcoin. Let's continue. It's an interesting move to reverse the clock to try to explain what initiated Bitcoin's rally, considering all three of these factors: rate cuts, the halving, and ETFs. Yeah, this sounds reasonable. Still, despite those economic drivers, the authors say that Bitcoin is still not suitable as an investment because it lacks cash flow, dividends, productive commercial uses, or social benefit, and that interest in the asset is mostly matter of FOMO and the effectiveness of the Bitcoin lobby. So what about gold? Does gold have cash flow, dividends, productive commercial uses, social benefit? Have you heard of store of value? Store of value? Hedge against inflation? Hedge against inflation? So yeah, the ECB seems to be making some very unreasonable claims. Right, next article. England's Law Commission seeks views on draft legislation to label crypto as a property. Okay, that's something new. So crypto used to be a security, now it's apparently a property. Might be good, might be bad, we don't know. Personal property rights are important for many reasons, including the event of insolvency or where assets are interfered with or unlawfully taken, the Commission said on Thursday. However, because digital assets differ significantly from physical assets and from rights-based assets like debits and financial securities, okay, this is good. England is actually acknowledging that digital assets are not securities. They do not fit within traditional categories of personal property. The Law Commission also called for evidence for its project on digital assets and electronic trade documents in private international law. The deadline for comments is May 16th. The responses will determine what happens next. For the crypto as property bill, that will be a final version to be proposed to the government. The international documentation consultation will inform the next phase of the project, which is likely to include proposal for law reform, the Commission said. Okay, this is quite interesting, guys. So we're starting to see that England is trying to deter from labeling digital assets as securities and trying to find a different label for them. Whether property quality is the right label, I can't tell yet. But this is an ongoing story and I'll keep you updated. Now what's next? The real story of the SEC suit against Kraken and why Kraken is moving to dismiss the case. As I said earlier in the video, Kraken is being sued by the SEC. Now let's find out why. On the morning of May 10th, 2023, Kraken testified about the SEC's overreach in crypto before both the House Financial Services Committee and the House Agricultural Committee. Kraken testified that in any new set of crypto exchange rules, Congress should limit the SEC's jurisdiction in favor of other agencies. The next day, SEC called Kraken to say it was going to sue. I mean, this already shows you how bad this governing body is. Today, we filed a motion asking the court to dismiss the SEC's lawsuit against Kraken. The SEC's complaint did not claim any fraud or customer harm whatsoever. It made only a registration-based argument that Kraken operates as an unlicensed securities exchange, broker, dealer, and clearing agency because crypto tokens are so-called investment contracts. Even taking all the SEC's allegations in the complaint as true, and many are not, its argument is flawed as a matter of law. The SEC never points to any contract between buyers on Kraken and token issuers. So there can't be an investment contract. This point here is very important because the Howey test, which is how the SEC judges whether an asset is a security or not, requires you to have an investment contract. For 8 decades, the US Supreme Court and Ninth Circuit have always required that the SEC identifies a contract when finding the existence of an investment contract. Digital assets don't meet the Howey requirements. In the Supreme Court's now famous Howey decision, an investment contract requires 1. An investment of money, 2. in a common enterprise, 3. from which the investor reasonably expects profits, and 4, because there's 4 points in the contract, however, for some reason it only shows us 3 on here, from the efforts of others. Okay, so you have to invest money into a company where you expect profits from the efforts of others. Now, you see, the problem here is, although all these points are true, Kraken can argue that there is no investment contract between Kraken and the people that are buying these coins. And the reason why is because Kraken is just an exchange where different people go to that exchange, connect their wallets and exchange tokens for either money or other tokens. So there is no investment contract between Kraken and the people that connect their wallets. There may have been an investment contract between the company that Kraken got these tokens from. However, there is no investment contract between Kraken and the people that connect to that exchange. So Kraken is actually being very smart for trying to dismiss this lawsuit. And this is exactly what Coinbase is also doing, because the SEC is not just suing Kraken, but is also suing Coinbase. Okay, that's enough suing for one day. Let's move on to the next one. Coinbase argues for spot Ether ETFs as analysts warn of concentration risk. Okay, the TLDR is that some analysts from S&P Global came along and said that due to the Ethereum ETFs, Ethereum might become too centralized, and due to Lido Finance, Ethereum a major share of all Ethereum stakers, Ethereum might become too concentrated. So a large entity owning too much Ethereum is a centralization risk, and a large entity having too much staked Ethereum is a concentration risk. And what Coinbase argues is that centralization can easily be avoided if we have a number of different Ethereum ETFs, and concentration risk can easily be avoided if those ETFs stake their Ethereum not just on Lido Finance, but on other liquid staking protocols or just normal staking protocols as well. Now, here are some stats showing that Lido Finance currently owns a 31% share of staked Ethereum. Now, if this number goes above 50, it will make Lido a big target for bad actors, or potentially Lido can become the bad actor itself. Of course, this is only speculation and I don't actually expect Lido to become a bad actor. Okay, moving on to the next one. Uniswap price skyrockets after Foundation proposes long-awaited staking rewards. Since its launch in 2018, Uniswap had this governance token that promised to bring rewards to its holders. And only now this is actually happening. The reason why this is important is because Uniswap is a US-based company. And if a US-based company is able to do this, then this will set the stage for loads of other companies to do the same and potentially bring a DeFi bull market. Let's dive into the article. The 16th largest cryptocurrency by market cap is up by just over 50% in 24 hours. The reason is due to a proposed large-scale upgrade to Uniswap protocol governance to incentivize active, engaged, and thoughtful delegation. In short, users who stake their tokens, that is, pledge them to the network will receive rewards. Those who hold Uniswap's governance token UNI can vote in how the protocol is run. A vote on the proposal will take place on March the 1st. I'm pretty sure that everybody that holds Uniswap would want to receive rewards from their tokens, so they will vote yes. And as soon as the vote is in, I would expect a massive DeFi spring. Okay, moving on to the next one. Galaxy Asset Management surpasses 8 billion in assets under management. GAM's exponential growth, more than tripling its assets under management over the last year, reflects a surge in institutional interest in digital assets and investors' willingness to work with a trusted, market-tested firm. Now, for those of you that don't know, Galaxy Digital is Michael Novograt's investment institution, and it's tripled its assets under management in just 1 year. It just shows how much institutional demand there is for crypto. Look at this, another one. Justin, 30 billion registered investment advisor platform, Carson Group, has approved to offer these 4 spot Bitcoin ETFs to their clients: BlackRock, Franklin, Bitwise, Fidelity. The demand is here, guys. Bitcoin is getting adopted. It will very soon be in everyone's pensions fund. Okay, next article. AI tokens resist cooling as Bitcoin Ethereum wobble. Okay, so where did this AI craze come from? It all started last week when OpenAI released Sora. As soon as it happened, AI crypto projects started pumping. That's the reason why both my AI plays pumped, Actis and The Graph. But it didn't stop there. We had Nvidia earnings this week on Wednesday, and Nvidia beat their projected revenue, which opened the doors for another surge in AI coins. And they have still not started to cool off. This next article is about WorldCoin and how it's also been overperforming over the past 2 weeks. Now, of course, WorldCoin will move on any news from Sam Altman or OpenAI, but it actually hit an all-time high. WorldCoin and Nvidia hit record highs as AI hype fuels crypto and stock market rally. Look at this, guys. This is what was happening in crypto on the 22nd of February. WorldCoin up 33%, The Graph up 21%, Render up 19%, Beam up 13%, BitTensor up 11%. I was actually expecting BitTensor to be up a lot more than 11% because I think that this is a very good AI play. But all of these AI tokens have been on a massive rally just because of the release of Sora and the Nvidia earnings. Let's actually look at WorldCoin. It's currently sitting at 1.2 billion market cap, but guys, the fully diluted is 88 billion dollars. There is going to be so much inflation in this token. I would not be touching this with a 10-foot pole. It might do really well in the short term, but long term it has such high inflation coming for it. Not investment advice. Moving on. AVAX dips as Avalanche network faces block production hold. So a couple of weeks ago, Solana had a 5-hour outage, and now AVAX has a 5-hour outage as well. There weren't any massive spikes in price for either of the projects. However, it just doesn't look good on the blockchain. Why proof of work blockchains like Casper, not investment advice? Then we've got an article from The Block. Meme coins underperforming as investors focus on Bitcoin and Ether. Guys, of course, as you know, money flows into Bitcoin, people take profits. Then money flows into Ethereum, people take profits. Then money flows into large caps, people take profits. Then money flows into low caps, people take profits. Then money flows into absolute degen plays like meme coins, and then money flows into Bitcoin again. And the cycle repeats. I guess we're at that point where people are taking profits on meme coins. Next, we've got an article that just shows what a weird community of people we are. Okay? You can now play Nintendo 64 games on Bitcoin thanks to this Ordinals project. Pizza Ninjas brings an N64 emulator to the Bitcoin blockchain. We're such an odd degen community, guys. Imagine a group of people come together just so they can encrypt Nintendo 64 games on the Bitcoin blockchain. I really love the crypto community, but we're so odd. And finally, I want to talk to you guys about this project called Karate Combat. Currently, their market cap is 23 million. You can see on their website that they're world's premier full contact striking league. So this is the arena where they have full contact fights, and they recently had an influencer fight with BitBoy. If you don't know who he is, he's a crypto influencer that took part in the influencer fight. Now, of course, guys, you can see that they're complete amateurs, but they were really going for it. Look at this. I mean, it's just incredible to watch. Oh my god, look at that. I actually watched the full fight and he did get knocked down in the beginning of the fight, but he did win in the end. I'll try to find the video now so I can show you. Here it is right here.
Look at this, look at this. Here's the knockout coming.
Boom. Oh, right on the button.
That was
good.
a legit lean back.
Yeah,
you know.
nice, very nice.
It's good.
He did actually win the fight though. I mean, guys, look at this. They were throwing proper punches. Whew. So I finally realized that the light behind me was switched off. And with this, we're coming to the end of the video. If you like the information I provide to you, please make sure you're subscribed and you're following me on Twitter at Alex Yanakov. Goodbye and see you in the next one.